Hi everyone, it's Sophia Melonē, the Debt Demolisher, and welcome to the Sophia Melonē Show, where we make debt freedom the new norm and wealth building the natural nature of habit. Let me tell you all this. The lack of cash is one of the biggest reasons personal finances fail. Why? Because inadequate cash reserves is the top reason for financial distress. If you're tapped out of cash every time a major expense pops up, your financial anxiety is bound to rise to 1,000. It's it is the running out of money or the constantly going into the negative that will actually shut your financial prosperity achievement down faster than anything else. In this week's episode of the Sophia Melonē Show, I'm going to show you how to easily calculate and check your cash flow on a consistent basis. And not only that, but how to analyze the changes in your banking activity to position your future cash flows for success. Now let's get started. All right, before we jump into our session, I want to explain to you guys a quick disclaimer. Because we're talking about finances and because we're talking about money, I have to make sure that I share with you all who I am, what I do, and what I have the autonomy to speak on, and what I do not have the autonomy to speak on. And so, as a certified financial education instructor, I serve in a capacity to teach and advocate for financial literacy. All information that is shared via the Sophia Melonē, the Debt Demolisher, or the Smash Debt platforms are for informational and educational purpose only, and not for the purposes of providing professional accounting, tax, and or financial advice. So neither myself, Sophia Melonē, or my company, Smash Debt, shall be held liable as a result of any inaccuracies or outdated information that is shared via the respective platforms. So therefore, any and all information should be independently vetted and verified before it is relied upon. So we're going to be talking about money. We're going to be talking about banking information. And I just have to make sure that you guys are clear the position that I stand as a result of sharing this information with you all on today's training. So I am here to deliver the midweek training. If you don't know, I am Sophia Melonē, the Debt Demolisher. And I serve in a capacity to teach you all about financial literacy from a holistic approach and a holistic state. I am the founder and chief facilitator of Smash Debt Inc., which is a financial education company that provides financial leadership coaching, credit coaching, workshop facilitation, and foundational training and support for small business financials. And this is all done in efforts to create debt eliminators and wealth sustainers. And so what we're going to be talking about today is how to easily calculate your cash flow on a monthly basis. And what you see on the screen right now is a detailed cash flow calculations fluctuation analysis template that I handcraft and personally designed that is going to show you how to quickly understand the changes that are happening within your banking activity and how to analyze them quickly and on a consistent basis so that you can then make changes in your financial habits as it relates to what's going in and out of your bank account and how that actually aligns to the goals that you've set and that you've set for yourself. And so before we go any further, I got to let you know, if you are new to the channel, I need you to subscribe. Hit that subscribe button, hit the notification bell, because I drop gems each and every week on financial literacy, and I share tips and tools and assets that you guys can use to position your finances for financial success. That's why I'm here. That's why I do what I do, and that's why I'm committed to this process. So I want you to join me each and every week. So hit the subscribe button, hit the notification bell, and make sure that you share this out, invite someone else into the room while you hit the like button. Okay, back to our regularly scheduled program. How to easily calculate your cash flow on a monthly basis. I need you right now to go and download this tool from bit.ly/bankflux. This is a fluctuation analysis template that covers a 12-month span. And what I'm going to walk you through is how to actually use this tool. This tool is a powerful tool if you use it correctly. So before we jump into that, let me just explain a couple of things in terms of the possible outcomes for cash flow, because some people may not really understand what cash flow is and what it represents. And so what we mean by cash flow is essentially three possible outcomes. Number one, you are in the positive, meaning that you have funds available to use at your discretion or for future planning after all of your necessary expenses are paid from your income for that period. So that means your cash flow is a positive, means it's a plus. Another option or outcome would be that you break even, meaning all of your income is sufficient to cover all of your expenses for that particular period. And I mean literally down to the penny. So your cash flow is actually a zero. And one of the things that I talked about with my coaching group, I'm coaching an accountability group, and I'm walking them through the process of establishing a zero-based budget. But the zero-based budget is actually allowing them to make sure that all of their income that they receive is accounted for in some form or fashion and is placed somewhere specific in their budget. So for my folks who may be watching, who are in my accountability group, if you see this and you see, hey, but we break even in our zero-based budget. Yes, we break even in our zero-based budget. However, we are repurposing any excess funds to place it somewhere else within your budget. So that may be to apply to your cash reserve, or that may be to apply to any debt that you're trying to pay off at this particular moment. So I don't want you guys to get confused if you're looking at breaking even and what that means and like, hey, but we break even. No, this is a different outcome that can happen with your cash flow. The third option is you are in the negative, meaning your expenses exceed the amount of your income for that period, and you are short in covering your expenses for that time frame. So that means that your cash flow is negative. It's a minus. And what we want to make sure that we're doing is we are staying as far away as possible from outcome number three, which is your cash flow being in the negative. That's not what we want. We do not want to, and we should not at all be operating in a negative cash flow. This simply indicates that you are living above your means. So you will need to take at least two actions, you guys, to circumvent the financial shortage that you're experiencing if you are operating in a negative cash flow. And that is, number one, you have to lower your expenses. And number two, you have to increase your income. Those are the only two options that will allow you to get out of a negative cash flow. Lower your expenses, increase your income, period, point blank. So my question for you before we go through this process is, do you know where you currently stand in terms of your cash flow on a month-to-month basis? Do you know? Type a yes, type a no, type something in the chat. Let me know if you know your cash flow calculation. And if you don't, you're watching the perfect video, because I'm going to walk you through exactly how to do that and how to do that easily. So as you can see on the screen, this is an example of the template that I'm going to be walking you through shortly. If you have any questions on this template as I walk through it, you can feel free to contact and email me once you have downloaded the tool and you have it. This is where you could submit any questions to me regarding it, but I'm doing this walkthrough, so you shouldn't need any of that. But let's jump into the meat and potatoes of our presentation. So let me open up the other slide so you guys can see the actual template. So what I have before you guys is the cash flow calculations template that I've developed, which is designed to show the fluctuations in your bank statement activity. A lot of times we don't have a tendency to look at the activities that is coming in and out of our bank accounts, let alone do we look at the total amount that was deposited versus the total amount that was withdrawn for a particular month. So I designed this tool. Specifically to help you understand and document the true cause of the changes in your financial position based on the monies that you have received and deposited into your account, as well as any expenses that have been withdrawn or that you've paid from your bank account. And what I want to share with you, which is very important in the instructions of this tool, is that to be fiscally responsible, it is important for you to know what is driving any material change in your liquid assets, as well as your overall financial position. So we want to be great financial stewards. We want to be exceptional. We want to be exceptionally responsible when it comes to our finances. So you have to know your positioning. And this tool is going to help you analyze that and show you how to figure that out quickly. So the first thing that you have to do after you've downloaded this tool and you make sure that you have access to it is that you have to make sure that you obtain your bank statements. So the first thing that you want to do is obtain your monthly bank statements. And this template is designed to last you for an entire year. So let me show you as I scroll over, you'll see that it's designed to take you all the way from December to November, or December to December, really. So it's giving you the change for a 13-month period, because we want to include our starting period, which will be the December of last month. Yeah, it will be December of last year, so that we're able to calculate our fluxes appropriately when it comes to our calculations for the January flux. So I just want to show you that everything is formula driven. All you have to do is populate information into the white cells, any blank cells. That's where you would insert your information. Let me go over here to the far right so you can see. So this is broken down into two categories. You have your deposits, and this is by bank account, because some of us have lots of bank accounts. And so if you have multiple bank accounts, all you have to do is just list your bank. So if you bank with PNC, you'll list that, and you'll see as you change the bank titles here, it's going to change down here under the withdrawal section. So if you have PNC, if you have Andrews Credit Union, if you have Andrews Credit Union, if you have M&T Bank, if you have Industrial Bank, as you can see, it's populating down here. So it's all formula driven. See, it's all formula driven here. So all you have to do is make your changes to this top portion, and it'll change on this tab as well as the subsequent tabs. And so what I was explaining here is, let's say hypothetically, for example, you've taken your balances, your December balances, so your balances from last year, which would give you the total deposits that was put into your account, or that's reflected on your bank statement for that particular period. So let's say, for instance, my December bank statement said that my PNC account was $2,748.72. My Andrews Credit Union was $0. My M&T Bank was $0. My Industrial Bank was $1. Bank number 5, $60. Bank number 6, $12,000. Things of that nature. These are all of the ending or the total deposits that my bank statement indicated was populated for the month of December. Okay. Then you're going to do the same thing for the withdrawal section. So let's say your bank statement will give you all of the withdrawals. It'll tally that number up for you. So if you put in the total withdrawals during that period, so let's say for December, my total withdrawals was $2,600. For PNC, for Andrews, nothing. M&T Bank, nothing. All the way down, Bank 8, $100, things of that nature. So what you see is calculating is my total deposits here from all of my banks, and then it's subtracting all of my withdrawals from all of my banks. So here it's calculating my cash flow. So it's taking my total deposits and it's subtracting my total withdrawals, and that gives me my cash flow. So my cash flow for December was roughly $15,000. Hypothetically, these aren't my real numbers, you guys. I'm just using this as an example. So when we get to January now, what we want to do is calculate the same thing. So you want to look at your January statements for each bank account that you have, enter in the total deposits that was deposited into your account in January. Then you enter the total amount that was withdrawn from your accounts from January as well. And as you see, I just have some random figures put in here, but what I'm showing you is what the template will do in terms of calculating the variance. So it's calculating the variance between, this is the dollar amount change between January and then the month prior to that. So from January to December 2019, the change from my PNC Bank or Bank One was $251. And then it's then going on to calculate the percent change, which lets me know what was the change from a percent perspective. And so what this tool is designed to do is designed to cause you to analyze anything where changes are plus or minus 10%, or if the dollar amount is plus or minus $1,000. So let me show you this really quickly. There is a separate tab that is included in this as well. And what it does is it shows you what it will automatically highlight the cells if anything requires an explanation for you to research. And so, for example, we have January. This was the flux for January. It's not one plus or minus $1,000, so it's not highlighted. It's not plus or minus 10%, so it's not highlighted. So you really don't have to provide an explanation. But on the withdrawal side, on the other hand, although the withdrawal change was $398, the variance is less than 1,000, the percent change is greater than 10% because it's 13%. So what you want to do is go back and look through your bank statements and analyze the two statements, the January and the February, to see what caused my withdrawals to be higher in January as opposed to December. And so as you're looking through your statement, an example of that will be, oh, you made this wouldn't be the right amount. Let's say you made a 390, because theoretically your explanation, your dollar amount of your explanation to tie to the variance amount here. So theoretically I could say my explanation was, well, I made a $398 payment in December as opposed to on my credit card as opposed to January. So different things like that will allow you to go back and research and analyze your activity to really see what's driving the changes in your statements from month to month. So let's go back to the Bank Flux template tab, and we will populate some more numbers. So these are just random numbers that I placed in for February. Let's put in some more numbers for the withdrawals. Let's say I'll change this number because we have 15,000. Let's say 15,000 was deposited here. And then let's say you withdrew $4,000 because you paid something off. Okay. So when we go back to this tab, this now shows that your withdrawal has been updated. So it shows you exactly how much has been withdrawn for that period. So as you can see here, my change between March and February, or my change between January and February, is $1,000. And so what I want to do is I want to show why this changed in terms of the withdrawal, which I gave you an explanation on that a little bit earlier. But when it comes over to the deposit side, one of the reasons why my deposits were $12,000 more than before was because I received a $12,000 refund or something along those lines. So just simple examples like that is something that you can use to really get down to understand the changes that are happening within your bank statements. This is a really exceptional tool. If you're a numbers person, I know that you will love this tool. It calculates everything all the way out throughout the entire year. So as you are populating numbers, it'll calculate the change month over month. And so if you are someone who really wants to understand their positioning and understand what's happening with their banking activity and how their cash flow is actually representative when it comes to their bank balances, this is the tool and a template that you need to utilize. Okay? Awesome. If you guys have any questions at all, make sure that you let me know, and we will jump back into the presentation because, we are just about done. And, I love to give you guys homework. So your homework is, number one, to go and download your bank statements. I need you to go and download your bank statements for December, January, and February, even up until the point where you watch this video. If you catch this video at a later time, download all of your bank statements. Next, you'll need to download the cash flow fluctuation analysis template, and you can get that by visiting bit.ly/bankflux. make sure that you get access to this tool. It's a $9 fee for the tool, but it's an amazing template that you can use and leverage for your entire lifetime, because all you have to do is buy it once, and then you could update your numbers on a monthly basis and use the same file year after year after year, so you can really get strong on analyzing your cash flow and figuring out ways on how you can improve it for its betterment. And then number 3, what I need you to do is make sure that you actually enter all of your deposits by bank type, as well as all of your withdrawals by bank type for each month. I need you to put those total amounts into the spreadsheet. After you've done that, then you're going to analyze and research any variances that are plus or minus 10% or plus or minus $1,000. So if the variance is $1,000 or more, or a negative $1,000 or more, then you need to be researching and providing an explanation in the explanations tab as to what caused the variance in your cash flow. Okay. And so if you have not done so already, I need you to subscribe, hit the subscription button, hit the notification bell, and also hit the like button, share this out, invite someone else into the room, and let them know the value that you've been able to find as a result of this training. So leave a comment. Tell me what you learned from this training today and how you're going to leverage the cash flow fluctuations analysis tool to improve your financial awareness and your fiscal responsibility. How are you going to use this tool, and what value did you find from this training today? After you've done that, make sure that you share this out with a friend. Invite someone else into the room. Don't leave all the juice for yourself. We all need to win when it comes to our finances, and this is an exceptional way to begin to leverage the knowledge and the insight that you're gaining just by the bank statements that your bank gives you on a monthly basis. After that, make sure that you join my mailing list. Go to sophiamelonē.com so you can find out the upcoming trainings that I have. I have a lot of private trainings that are forthcoming, and you don't want to miss the inside scoop. Get on the list. Go to sophiamelonē.com, and then I want you to make sure that you grab this tool. Don't miss out on this gem. Go to bit.ly/bankflux. Download the tool, download your bank statements, begin to enter the information, start analyzing. And again, if you have any questions, you know that you can contact me directly, because my contact information is at the top of the tool and the template. So let me know, and I look forward to hearing from you. And I have to remind you and let you guys know that your financial prosperity awaits you. And thank you for tuning into this week's episode of the Sophia Melonē Show, where we make debt freedom the new norm and wealth building the natural nature of habit. I look forward to seeing you guys next week, as I'll be back with more gems. So stay tuned. Love you guys. Share this out, subscribe, and invite someone else. I want to hear your comments, so drop them below and grab the tool and let me know if you enjoyed it. Have a great week.